Okay, it's 3 minutes past the hour, so we're going to get ourselves started. My name's Steven Reiter. I am the, I'd say, designer of this web trading platform, along with my colleagues here at AvaTrade and at Sentry Derivatives, which is part of AvaTrade. I'm responsible for the options business at AvaTrade, and I'm going to take you through this brand new web trading interface, which is long overdue. So at AvaOptions.com, you'll get a login screen. I've got a demo account I'm going to log in with, and we have a link here to sign up, which will take you to a sign up page. If you haven't got an account already, you can open up a demo account or a real account and use our beautiful new web trader. I'm going to click login, and let's get right into it. You'll notice right away, if you've used our mobile app, this has the same look and feel, the same user interface, and of course it's the same account, whether you're trading in the web trader, the mobile app, or the downloaded Windows platform, which is a more professional, old school platform. They're all the same account, they all have the same calculations, although there are some advantages to trading through the web trader and the mobile app, which I'll discuss. So here it looks like almost any other trading platform. On the left side of the page, we've got our products. At the top, we have the major FX products in silver and gold, alphabetically. Then we have CFDs like crude, the CAC 40 index, the DAX 30, the Dow, the FTSE, the NASDAQ. And then below that, you have the rest of the FX products listed alphabetically. So you can scroll through and pick whatever product you'd like to trade. If you want to know the leverage and other terms of trading any product, just click the I, the information button. And on the right side of the screen, you can see market information, which includes the high, low, and close, previous close. We have implied volatility charts, which you might recognize from the mobile app. It looks exactly the same. You can see implied volatility charts showing from the left, the implied volatility of a 10 delta put. In the middle is at the money, on the right is a 10 delta call, and the blue line is showing where implied volatility curves are today. Green is where vols were a week ago, and red is where they were a month ago. So you can see that vol has picked up actually for the coming week, perhaps around Brexit and other potential issues. I'm being asked if you can trade options from South Africa. The answer is yes, absolutely. You can buy and sell options, by the way. And then if I scroll down on the right, we can see that the lot size definition is 10,000. 1 pip is defined. Leverage for this account, which is the same for most accounts outside of the EU, is 100 to 1, whether you're trading spot or options. And we're soon going to increase leverage to 200 to 1. We're going to do that in January when we launch options on equity indices. The interest rate, this is an annualized interest rate for holding a position, holding a spot position. Options have no overnight interest cost, and tolerance for executing an option or executing a spot trade, which is 5 pips. I'm just going to close this, and let's talk about what's unique in our screen. So as I said, on the left, we have a list of all the instruments, and on the main part of our window, you can see a chart showing where Eurodollar has been for the last couple of days. This is a 1 hour bars. You can click here and look at a 5-minute bar or whatever else you'd like to look at. I can zoom in just by clicking or holding the mouse over the y-axis and making it larger. I can bring in more data by with the scroll wheel. And what this is showing us is on the left side, we have history. Where has the market been? And on the right side, we have your profit and loss scenario. If the market goes up, you're going to profit. If the market goes down, you're going to lose money. So we're looking at a trade on 100,000 Eurodollar, and we're buying. If I click here, I can look at my P&L in dollars. So if the market goes higher, I'm going to make money. Goes lower, I'm going to lose money. And of course, if I go short, then I'll profit when the market goes down, and I'll lose money when the market goes up. You have the exact same interface on the mobile app. And what's nice, of course, is that we can change the size of all of our windows. I can change the size of the trade either by dragging this slider to the right, minimum of 10,000. At the moment, the maximum size of a trade is 1 million in the web trader, just because it's a new platform. We'll expand that in January. You can also click the calculator and use these pluses and minuses to change the size of your trade however you like. So 100,000, 200,000, 300,000, etc. And we can put in limit orders. If I click the word limit, I can put in an entry limit. For example, I'd like to enter the trade at 121.80, good until the end of the day. And I'll put in a take profit at 122, good until canceled. So this simply says if I enter the trade at 121.80 on a buy limit and I hit my take profit at 122, that is a 20 pip profit times 300,000, which is a $600 profit. And you can see in the profit and loss diagram, ooh, somebody says there's no sound. I hope that's wrong. Can anybody hear me? Can somebody just type that you can hear me? Surely somebody, yes, you can hear me, thank you. I'm sorry, Kamal, that you can't hear me. The problem appears to be on your side. Thank you, Marco. Thank you, everybody. Okay, great. So you can see the profit and loss diagram using colors is very interactive. It's showing you immediately. You have a profit range, which is in green. Your profit stops when you're taken out of the trade at the take profit up high. Let me just squeeze this down a little bit. Right, there's our take profit. And I have unlimited losses, unlimited loss potential. So let's put in a stop loss as well. We'll put in a stop loss at 121.25, which is just off the screen a little bit. There it is. So the most I can lose is $1,650. Of course, if I change the size of the trade, all these numbers automatically update. So this is a really clean, interactive interface. We designed this because of our options education. We want to make options clear, but for spot trading as well, it's just so nice to see your profit potential and your risk in colors and in a chart, which is just so clear exactly what's going on in your trade. And if, of course, if I switch to going short, then I have a take profit down below and a stop loss above. Okay, so let's say I want to execute this trade, but I'm just going to do it as a market trade. I click buy again, and it opens up an execution window on the right side. It's saying that I'm buying 100,000 euro-dollar spot with a take profit and a stop loss. It tells me how much margin is available, how much additional margin is required, and the overnight interest cost is $7.68. My bid offer spread is $10, which is 1 pip. Execute, done. Nice, quick. And you can see this trade right here. Let's see if I'm sorted correctly. Let's sort it there. There's our trade. We bought at 121.85, and we have a take profit and stop loss. Actually, it looks like we have a take profit and stop loss. That's going to get updated in a moment, or the sorting might have been messed up. Let's see. Yeah, the other side of the trade will come in a moment. That's just a little delay. But there's our trade down at the bottom, or here it is up at the top. Where are we? Okay, here's our trade. Nope. Oh, I have to sort it by the order number. Okay, so here's our trade. We went long spot. Now, let's say we want to trade, instead of trading spot, I'm more interested in trading an option. Here where it says spot, I click, and now I can choose any option or option strategy. And again, this is just like we have in the mobile app. If you don't know what any of these things are, you can, of course, watch some of our videos, but you can also look at a guide. I click here on guide, and all these icons turn blue, and you can ask yourself, what's a call? And it gives a little explanation of a call. It's the safest trade for upside exposure or for hedging your risk. And very simply, you're buying a call, it's a bullish view, your maximum loss is the cost of the option, your reward is unlimited. What does a sell strategy look like? It's this. Look at other strategies, like a call spread looks like this. Buying a call spread looks like this. Sorry, this is buying a call spread. Selling a put spread. You've got all the strategies right here. Let's go back to a simple call. I click on a call and my chart updates. This is showing us a call option for 1 week. I've got a 5-minute chart. I shouldn't have a 5-minute chart. Let's put in an 8-hour chart. So here I can change my expiration date. Let's make it a month. This is now showing me about 1 month of history. So where the market has been for the past month. In the center, we have what's called the confidence range. This is showing us where the market may be going in the next month. The confidence range is based on implied volatilities. This white arc with the 2 dots at the ends is showing us plus and minus 2 standard deviations of movement for the next month. So it's framing the risk of the trade. Plus and minus 2 standard deviations is giving us, I think it's a 95% confidence range. We can say that we're 95% confident that the market is going to be between these 2 white dots in the next month. The inner parabola here, this inner one is plus and minus 1 standard deviation, and then the outside one is plus and minus 3 standard deviations. So it's always going to frame the risk of the trade. If I make the market, if I make the expiration date longer, then the range will be wider. It's going from, where are we going from, like 113 at the bottom up to about 130. Okay, that's the expected range, or that's a likely range for the next 3 months. But if I'm looking only the next 2 weeks, the range is going to be much tighter because we have much less time for the market to move, going from roughly 118 to 125. So here's a 2-week option. If the market goes up, I'm going to make money. If the market goes down, the most I can lose is what I paid for the option. Here I can set the strike, the call strike. That's the price at which I have the right to buy an option. Down here, if I have the right to buy Eurodollar at 119.50 when we're already trading at 121.80, is going to be a very expensive option because it's already in the money by 2 points. If I have the right to buy out of the money, I have the right to buy at 124, it's much, much cheaper because the chance of this option finishing in the money is much smaller. What is the chance that this option is going to finish in the money? You can look at the delta. Right here, D equals 0.13. The delta is 13%. That is telling us that this option essentially has a 13% chance of finishing in the money. If my strike is much lower, then I have a much higher chance of the option finishing in the money. So it's very clear. Again, I can change my profit and loss labels to look at my profit and loss in dollars, or in price terms, like 32 pips is what I'm paying for the option, or in euros, if you like, since this is a Eurodollar trade in a dollar account. Over here on my pricing, I can see the bid is 25.5 pips and the ask is 32 pips. If I click on this white button, I can see the price in dollars. So I can see it in price or in dollars, since this is a dollar account and this is a dollar quote currency. The second term, the after the slash, is dollars. So if I choose a different currency pair, I may have choices to see this in yen or in others. So this option is only going to cost me $329. I like it. Let me click this button again. Here's what we're going to execute. Execute. Trade is done. And there it is right at the top of our open positions. I bought a call in 100,000 Eurodollar. Strike is 123, expiring at the 6th of January. This is where it was filled, 33.5 pips. The offset, which is where I could sell it for right now, so I'm incurring the full bid-ask spread in my mark-to-market right now, is 26.8 pips. And it's got theta and vega, etc. If I click here under I can see all the details of the trade, such as when did I execute it, when is it expiring, etc. And I can see it on a P&L chart as if I want to close it or modify it by adding a take profit or a stop loss. Any questions, feel free to pop them into the question box. I am watching it. I hope this so far is very clear. It's a, this platform is an evolution over my career. I've designed things like this in spreadsheets in the past, and now we have the technology to be able to offer an interface like this. Let's say I'm interested in Kiwi. Okay, the Kiwi against the dollar, the New Zealand dollar against the US dollar. And I'm going to look at a strangle. A strangle has two strikes. You've got a call and a put. You're buying them both. I can change the strikes individually. And as I change the strikes, you see how the P&L payoff is impacted. And I can expand this and I can reduce this. So it's very interactive. And up here, I have this thing called the horizon. If I change my horizon date, today my P&L is here on this orange line. If I execute the option today, if I buy it today, I'm going to incur some loss immediately because of mark to market. But as time goes by, you can see how the value of the option is going to change until we get to expiration, where the orange line is matching the red and the green. Let's look at something like a call spread. A call spread is two strikes also, but we're buying one and selling one. Let's go for 2 months. So the Kiwi has been trending higher, mostly because the dollar has been trending lower. If I buy this call, let's say I'll buy a 69 call and I'll sell a 73 call, you can see what my P&L is going to look like. The most I can lose is $2,000. The most I can win is about $2,000. I've got limited loss potential, limited profit potential. It's balanced. The whole point of options is that the red and the green, the risk and reward, are balanced. The value of an option is very simply, well, maybe it's not simply, but the value of an option is the present value of the expected payoff. So everything makes sense. If I look at the value of this option today as the market moves, we're on the orange line. And as I move towards expiration, we get to the expiration line. Really easy to use. So let's go ahead and execute this trade. Buy, execute, done. And here it is. It's popped into our open positions. I can expand my open positions to see all the things I've got. I can look at my history and see all the trades that I've done in this account today, the most recent being these two Kiwi trades. I can also look at closed trades and the P&L of each of those closed trades that I've done today. This is a web trader, just to be clear. It doesn't require Flash or anything else. Everybody can use this in any browser on a desktop or a laptop. This is not yet working in a mobile web. So if you're using your phone or an iPad, you should be using the mobile app. And if you're using a desktop or a laptop computer, you can use the web trader, which is really easy to use. Okay, let's do one more trade. Let's say I also want to do a call spread for a longer date. So let's just make this a little smaller here. Close that. Instead of 2 months, let's do 6 months. And I'm going to sell this call spread, so a little bit different. I'm going to execute. There we go, done. So now we've got 4 Kiwi trades. And you can see the new trade that we just did. So we've got 2 trades going out to June of next year and 2 trades going out to February of next year. So here's where we have some extra features in the web trader that you don't have in the mobile app. I can choose an open position like this one. When I do that, the screen changes to show me closing this call option. We no longer have the ability to move the strike because we're looking at closing a trade, not opening a trade. I can click on the word limit. Let me just close this for now. And I can add a limit, a take profit and a stop loss. Oops, something's not working there, so let's just ignore that. So I'm looking at here at closing this option. I can choose another position and look at closing that too. I can also take a 3rd position and a 4th position. So now what I've got is this funky kind of payoff. I'm showing all 4 of our Kiwi options, and it's showing us in the red and green what our profit and loss is going to look like at expiration if the market moves to one of these levels and stays there. And we can also see over time how this evolves. Okay, very funky, very cool. And maybe this is for an advanced course, but the point here is to show you that we can see all of our positions and how they evolve over time. So what's happening here, I've got a call spread for the short date that I'm long, and then I've got a call spread for the longer date that I've sold, and this is where my P&L ends up like that. Now let's say we only look at one call and one put. I'm gonna close this one. Let's just choose these, let's choose these two options. Here I've bought a call, I'm long a call, I'm looking at closing the long call that expires in February and the short call that expires in June. So today, the P&L looks like this. When we get to the expiration of the first option, which is in February, it's in 63 days. So let's get out here to 63 days. It's right about there. So here I'm looking at the orange line is what our P&L looks like as of the expiration of the first option. This is what's called a vertical spread or a calendar spread. And if the market doesn't move beyond that point, then I'm going to start to earn the decay of the second option. So that's why I end up with profit in all scenarios, because this is assuming that the market doesn't move between the first and the second option expiration dates. It's something more advanced, but I just want to show you that you can see all of your positions in a given product together. So for example, let's cable. Let's choose a cable position, choose all of our cable positions. And you can see that I have a cash positions here, and I'm long a call out here. I can look at fewer of these positions and see how they'll look. It looks like I'm long a call and short a call on the same date. That's not very interesting. Here I'm looking at bought a call, sold a call. Again, let's just look at one of them. So here's just one position where I'm long a call, and here's a position where I'm short spot. So I've sold the pound, but I've bought a call against it, which means I effectively am long a put. Sorry, long a call and short the underlying market is the same thing as being long a put. I'm going to clear all this out and go back to basics. Buying the S&P 500. When you buy the S&P 500, you can only trade. We don't have options yet, so you can only trade spot. Let's look at a 5-minute chart. Looks like we've been trending higher today. Nothing to click. There's no options available yet, so you can only trade spot. You can buy it or you can sell it, and you can again put limit orders, entry limit orders, as well as closing limit orders. You can see in price or in dollars. The P&L, sorry, can be in price or in dollars. Here's dollars, there's price. Let's look at Aussie CAD. So in Aussie CAD, I can see my P&L in Aussie or CAD or dollars, because this is a dollar account, or price. I have 4 choices. Make that a little bigger. Here's my CAD P&L. Is it possible to simulate an adjustment with an existing position? So Marco, I think you're asking if I can see what it would look like to add a position before executing it. And if I'm right, the answer is not yet, but we will have that in the coming months. We will be adding that capability, basically to choose your positions and then say, well, what if I add this position? So to overlay all of my existing Aussie CAD positions on top of this and see it before I execute. It's in our plans. We don't have it yet. Our first priority was to go live with the web trader. Next priority is options on equity indices. And then we'll be adding all of these features that you'd like to have. Gold, you can trade gold and you can trade options on gold. Call spread on gold. Again, you can change the windows, see my profit in dollars, see my profit in price, see my profit in gold. Do all these trades. Drawing trend lines. Up here we have two choices. We have the cross target. We have type of chart. So you can have a line chart, a bar chart, a candle chart, a Heikin Ashi chart, which is nice, and indicators. Let's add a moving average for, let's see, a simple moving average, or we can have an exponential or a weighted moving average. Let's just go with a simple moving average. I like to put it in purple. So let's make it a little bit thicker. Apply, there you go. And we can also add something like Bollinger Bands. And again, we are going to be adding more indicators over time. So there's your trend lines, and they'll stay as you move. Oh, nope, they're supposed to stay, but they don't. I guess you have to add them back in. Fractals, all this fun stuff for anybody who likes. Stochastics can be are shown along the bottom of the chart. So we've got this stuff right here. Margin value. So required margin is shown, the current required margin is shown at the top of the screen. And when you click to open this execution window, you can see margin available, additional margin required for this trade, the bid-ask spread for this trade, and the cost of the trade, which is your overnight interest cost for spot trading. But options trading, of course, does not have any overnight interest costs. So let's look at a call. If I buy this call, it's going to reduce the margin required. So it's all here, just like at the mobile app, you also have it. And you can again look at market info and check out implied volatility charts and other information down below. Ready to trade, buying options, selling options. So if I sell this option, I need more margin. If I buy this option, it's going to reduce margin because it's offsetting the risk of my existing positions. And I can again add those trend lines. Oops. Let's bring in more history. We've got a little bit of a screen crowding issue that we're going to solve, but I can add in here my RSIs down below, and I can put in moving averages or whatever I like. Purple, thicker. Okay. I'm being asked, what is a strat? Where is a straddle? What does a straddle look like? Let's go back to the strategies, choose straddle. With a straddle, you're buying a call and a put, so you have one strike, but two options. I can buy a straddle and I can sell a straddle. If I sell this straddle, execute. You'll see down below, this has been done. Let's go back up to the top. And there it is, I sold a call and I sold a put. If I then want to go and close these trades, I can choose one or both or as many as I like. I'm going to close half, execute. That's done. And now you see that the trade size has dropped to 50,000 because in the history, I opened 100,000, I closed 50,000. The other one is coming or it's not sorted. And here you can see, I probably have to sort this somehow. Here, down at the bottom, here are the two trades. I opened 100,000, I closed 50,000, and of course I had a small loss because of the bid-ask spread. We do, by the way, have chat right here. So if you have questions, just pop right in, right from the web trader and ask questions, and hopefully somebody is around to answer you. I can't promise that we're always on the ball, but we'll do our best. Can we change to a white background? There's always somebody. No, this doesn't have a white background yet. Maybe we'll get to it at some point. We have the black background, lots of colors. We did it this way because we think it looks cool, but also on a laptop, it will save battery if you have a black background. So for now, we're sticking with a black background, but at some point, Roman, we'd love to offer some different skins. If you are looking for the white background, you could look at our desktop platform, which is a Windows-based platform, which I can show you in a moment. clean, yes. You should be able to see the, this is the Windows platform. Over here on the left, you'll see your open positions at the bottom right, sorry. And this just is a lot of numbers, more of an options chain. I can choose my currency pair here, and I can see my bid-ask spreads and things like that. And on the left side, you've got tiles, trading tiles. This is the easy one to use, and it simply works in the web. So you don't have to install anything. It's quick and easy to use. Roman, thank you. WebTrader looks much better. I agree, but there are some traders do want to have that old school numbers. We will be adding very soon what the option chain view. So instead of seeing everything here, just one option price at a time, you'll be able to see all the options prices like an option chain, where you'll see all the strikes overlaid over the screen. That's in development as well. But index options, equity index options are our next priority now that this thing is live. Nice and quick and easy to use. Again, click here to change your strategy. Synthetic forward. The synthetic forward is buying a call and selling a put. So you have, again, one strike, just like on a straddle. When you do a synthetic forward, buying a call and selling a put is just like a spot trade with future settlement. I'm buying a call and I'm selling a put. That means if the market goes higher, I'll exercise my call at expiration and I'll be long the asset. And if the market is lower, then Ava is going to exercise the put to you at expiration. And again, you will be long the asset. So a synthetic forward is a way to buy the asset in the future. Instead of paying overnight interest every day, it's embedded into the pricing. You have a somewhat wider bid-ask spread in a synthetic forward, but you'll have much smaller overnight interest costs. So if you really want to hold something for a month, you might consider using a synthetic forward. And if you are in the EU and regulated in the EU, options enjoy triple the leverage of a spot trade. Options are not limited in leverage by the ESMA rules. So with options trading today, you can get 100 times leverage. But with spot trading, you can only have 3 times leverage or even less. So if you're considering trading and you're in the EU and regulated in the EU as a retail customer, options will give you much more leverage, and a synthetic forward is a way to replicate a spot trade or a forward trade much more efficiently. So it doesn't really matter where I put my strikes. You can see that P&L overall doesn't really change, because no matter what happens, I'm going to be long the asset. And as time goes by, the only thing that's happening is the forward is moving. I'm reaching the forward, and you're going to realize owning the asset at expiration. Selling a synthetic forward means you're buying a put and selling a call. The only limitation we have here is that limit orders can only be placed on one option at a time. So you cannot put a limit order on a straddle or a strangle. You can only put limit orders on the individual legs. So there's no limit button here. If I go back to a call, we have a limit button, and I can put in a take profit and a stop loss. And I'll just show you something interesting. Let's make this a 2-month option. I'm going to put a take profit and a stop loss. So this option today is going to cost 160 pips. Let's put in a limit order to buy it for 100 pips. It's showing us where spot has to go in order to be able to buy this option for 100 pips. So my entry limit order for 100 pips is going to happen somewhere, it looks like at about 120.80 if it happens today. So spot's got to drop a whole lot in order to save 50 pips or 60 pips on this option, which makes sense, right? Because the delta is less than 1. I'm going to put in a take profit at 500 pips, which means I want to sell this option for 5 points, and I'll put in a stop loss saying I'm going to buy it for 100 pips, but I'll put in a stop loss at 50 pips. So this is what it looks like. As time goes by, the spot level required to reach these limit orders is going to change. Watch what happens when I move the horizon date to the right. At expiration, in order to sell this option for any value, it has to be in the money. And in fact, it has to be in the money by 50 pips. In order to be able to sell this option for 500 pips, spot has to be higher because the option has no time value left. Go back to today. Okay, this take profit is going to happen around 126.70, 126.70. At expiration, the take profit of 500, to sell this option for 5 points, this option has to be in the money by 5 points, which means it's got to be at 127, which is 5 points above the strike. The strike must be 122. So very cool feature of the app and the web trader is how we've tied limit orders to time and to the underlying spot price. Something for the advanced traders, I guess, but if you're an options geek like me, it's pretty cool. Okay, so we're at 40 minutes into this webinar. I'm going to draw it to a close. I hope you find the app clear and easy to use. It's worth playing with it. If you have a demo account, use it. If you don't have a demo account, please open one. I really would appreciate it if you send us any feedback. You can send it to options@avatrade.com, or you can send it to us in the chat, or you can send it to on the homepage. There is a link for email to send comments to support@centryd.com. Any of the places, we'll be sure to get it and take your feedback into account. Any last questions? Thank you, Nico. Nico suggests that it looks very impressive. Thank you. I think that there's no options platform like this on the market today. And because AvaTrade is regulated everywhere, except the United States, of course, we don't take customers in the United States. Because of our regulation, you're safe trading with AvaTrade. We have a real unique options trading platform. And of course, you can trade the underlying assets too. And margin is very efficient. Remember, we're doing portfolio margining. So we're going to put together all of your options trades in a given product. So we'll take all of your spot and options trades in the Eurodollar. We'll look at the risk of them together as a portfolio and margin that way. You can read more about it on the Ava website under the trading conditions. Thank you, Gerd. Yep, we're working on options on equity indices. I'll have to say that options on individual shares will come later because they are traded as American style and life gets more complicated. But we're definitely going to be working on options on equity indices. Oh, sorry, they're already in development, and we expect to have the first batch available in January. Okay, I'm going to end the webinar here. Thanks, everybody. Again, it's avaoptions.com, or just go to your, just log into AvaTrade, and when you get to your accounts page, when you have here, I have an options account, the third row, I have this link that says web trading. Just click that. It warns you that you're going to leave the web trader. What that really means is you're leaving the MT4 web trader, and it'll open up the login window here. And again, very soon it'll be single sign-on. You won't have to log in a second time. Okay. Thanks, everybody. Have a great day. This is being recorded. We're going to edit it just a little bit, and then we'll put it on the AvaOptions YouTube channel. And we look forward to seeing you trading. Good luck and Happy New Year, Merry Christmas, Happy Holidays, and please stay safe. Goodbye.